Welcome, everybody. This is the Trader Circle. What is it, June 8th, 2025? For those who are new here, welcome. For those who are returning, welcome back. For those who are new here and aren't really sure what this is essentially just like a free group coaching class. So we can go over literally anything that you want. You can ask me whatever you want, and we'll go over it, whether it's, struggles in trading, life, strategy, literally whatever you want, we'll go over it. I did have some individuals when they signed up who wrote some things down. Thank you. Let's go through the list. Let's see. So Lisa's here. Lisa, you wanted to go over stop loss management?
Yes,
Cool. Let me share my screen and bring up my charts. And in the sense, to be clear, when you say stop loss management, do you kind of mean like where should you be placing your stop losses? Like how much you should be risking for a trade or what exactly?
to be honest with you, I'll be honest. I haven't been putting in stop losses, so I've been losing a lot of money. So I need
Mhm.
help in even doing it.
Gotcha. And again, no judgment here. We're all here to learn.
Okay,
I've been there
okay,
myself. You're not the first,
okay,
you're not going to be the last.
okay.
Let me so when you say like even putting the order in, um, do you mean like on the whatever platform you use, like how to even place the order?
Yes,
What platform do you use?
Robinhood.
Ah, that'll be a little problem because I don't use Robinhood and I could be wrong. For those who do use it, I don't think you can set a stop loss. And if you can, it might be like a little like backwards. But I don't use it, so I can't really tell you how to do it. The biggest thing that I'll probably say if I were in your shoes is get a better trading platform. If you want a simple transition, you can go into Webull. Webull is super straightforward, in my opinion, how to set up your stop loss and all that good stuff. At least when I used to use it anyway. I mainly use Thinkorswim now. Thinkorswim pretty much has everything: charts, advanced orders, all that good stuff. Just the initial learning curve is a little challenging for Thinkorswim. So I started off with Robinhood first when I first started, and then I went into Webull
Please,
and
thank you.
Swim. So definitely would say get a better platform and be a little more efficient, even if it may be challenging, because we really want to be as efficient as we can. And either not being able to place a stop loss or not knowing how to do one can be pretty challenging. So that'll be your homework for the weekend. Learn Webull. I have a video on my YouTube channel that you can check out on how to set it up. I mainly use the mobile version. The
Okay,
the desktop version, I used it here and there, but it wasn't like it's a little slow for me. So to me, the mobile version was super easy to place trades and things like that, and I just got used to it. But you can always set up the um, desktop version. Maybe that's more efficient for you. I always encourage paper trading while you're experimenting with new things to see what may work better for you.
okay, okay,
And definitely paper trade as you learn it because you don't want to be in a trade and have no idea how to get out of it.
okay.
Do you know how much to risk per trade when you're in a trade, like based on your account and things like that?
Not really. Not really. Uh,
So let me,
like
I might,
15%?
when you say 15%, like 15% of your whole account in a trade, like, or
No,
like,
like 50% of the trade.
not necessarily. So the way I like to do it is, let me bring this up. I gotta just download it because I don't have it on this computer. Let me know if you guys can see my screen. We should be looking at a document.
Yes.
Cool. So I kind of just have three categories based on the type of trader that you are. So, if you're an aggressive trader, you might be using 15 to 20% of your account. And let's say you have a $10,000 account size, you're pretty much going to be putting 1500 to $2,000 per trade in an account. Now, if you don't want to lose, let's say more than 30% on the trade, that's pretty much going to be 450 to 600 loss per trade. And then I'll kind of give you an idea how you can like kind of calculate it when you're trading. I fall into more in the moderately aggressive trader where I use 7 to 10% of my account per trade, depending on what type of setup it is and things like that. And then I don't do it fully in the sense as I did before. Like if it's more than 30%, I'm just going to leave the trade alone. If the setup is good enough, I'll take a bigger percentage loss. I'll just lower my position size so it'll give me a similar loss amount. So for
Okay.
example, let's say we put in, let's say I don't want to lose more than 300 on a trade. So if I put 1,000 in a trade, that'll pretty much be 30%.
Okay.
Now, let's say the setup is good, but it might incur a bigger loss, but I still don't want to lose more than 300 a trade. Then I could do 600, and then my max loss could be 50%, which will be the same loss amount, just different sizes for the trade.
Okay.
Are you familiar with like option Greeks and things like that?
Yes.
Cool. So you understand like how for every dollar that the stock moves, we make or
Mm.
lose, give or take the amount of the delta.
Yes.
So let's say for the sake of the conversation, what is this? 60. Let's say our loss is $1.50, so a delta and a half. And then I'm just going to make up some numbers just to make it easy for us. So let's say you're in SPY puts. Strike price doesn't really matter right now. Um, Entry, let's say you paid 200 bucks or $2 for it. And then the delta would be, let's just say 50 to make math simple. So we can see here that the stop loss is $1.50. So we can assume that we're going to lose approximately $75 per contract based on the delta and how much the stop loss is in regards to the dollar amount on the trade. And
Right.
then in this case, let's say our target is $2 flat, again, just to keep math simple. So if it goes in our favor and hits the first target, we're going to make at least $100, pretty much the delta times two. So
Mm-hmm.
in this case, if I don't want to lose more than $300, I can get four contracts at $800 total, because if it does go against me, I'm going to lose 75 bucks a contract, which would be 300 bucks.
Okay.
So there I can properly get into the trade and know more or less how much I'm going to be risking on the trade. Depending on the time frame that you trade on, you may have to do like math really quickly. I'm just
Mm-hmm.
used to it at this point, so I kind of just like get an idea as like the candles forming before I get into it to see how much I'm going to lose and how much I'm going to be willing to spend on the trade and things like that. But yeah, this is an example on how I would kind of determine if I'm willing to take a trade or not and how much I'm going to risk on it. Does that make sense?
Yes, it does.
Cool. So again, things for you to do. Definitely get a different platform, learn it. I know Robinhood can be easy on the eyes and maybe easier in the user interface, but you really want to use a more efficient platform to make trading easier for you, not harder.
Okay. That makes
Cool.
sense.
Excellent.
All right. Thank
Definitely
you.
feel free to update me with your
Okay.
progress and any
I
and
will.
everybody else.
I will. Thank you.
Let's see. Of course. Isaac, I don't see you here. Michelle. Don't see you either. Venny, if you're in here, maybe on a different name, let me know. But I don't see you here. Yolanda, don't see you. If you are in here, let me know. Renisha is not here. Tidge or Tig, however you pronounce that. If you're here, let me know. I don't see your name. Terrence, you are definitely in here. Also, by the way, you guys can just put your questions and whatever you want to go over in the chat. I'm just going over through the list that the when you signed up that you wrote in there. Terrence, you wanted to go over like kind of staying consistent and switching from day trading to swing trading based on your work schedule changing up a bit.
Yeah, so I think when we did our one-on-one, I mentioned to you that I'm in sales, so I am fortunate enough that I get to work from home.
Mhm.
But recently took a new sales job, and now it does not allow me, which is crazy to say, to trade as frequently as I used to. So majority of my setups that I'd say I've gotten a lot better at are more so day trades. Your orbs, your first live 322s. Developed a little bit of a strategy of the 12 hour, but now I'm not going to be able to take those setups as I frequently would like to. So now I still want to obviously trade, so I have to try to migrate over to more so swing trading, some leaps. So trying to find the best strategy in order to do so, and I find it a little bit more challenging. So I'm just kind of putting that out there.
Definitely. So, do you have like any time to trade at like market open for even like for 30 minutes? Or is just
Uh,
like,
Sometimes I can't. It varies on the day. So, and then this week with a lot of catalysts that were happening, it was just like, oh, this is great. I'm taking advantage of some really heavy price action, but the job's still new. I've only been here about a month now, so not as frequently as I like, to be honest.
gotcha. The biggest thing that I would say, at least when it comes to the strat and swing trading,
Hmm.
it's pretty much similar things that of what we know already, just using it on a higher time frame.
Okay.
You may not get like a setup every single day. You might get maybe two setups in a week, maybe even one. It really depends.
Hmm.
For example, you already know about my W setup,
Yep.
pretty straightforward. I took this on CVS
Okay.
pretty much last week. Yeah, a week or two ago. We pretty much had the nice little hammer setup.
Mm-hmm.
Next day it opened up. We literally just take that to the upside, wait for the center to hit, which it did.
Hmm.
And then I took the rest of it off when price reversed because it should keep on going. And then when it completes, then it reverses. But it looks like it's having some trouble here. So I cut it once the daily reversed. But yeah, pretty much same exact setups, just waiting for them to happen on a higher time frame, which tends to be, as we already know, a lot slower because
Yeah.
daily basis you might get like one or two setups even every single day. But for swing trading, they might be a little more rare.
So
So
focus more so on the higher time frames, and but take the same setups. It sounds like.
essentially, because that's
Okay.
pretty much what the strat is. Same exact setups, in my opinion, just
Hmm.
the higher time frames and longer hold time. So general rule of thumbs, if you're going to be doing like options,
Hmm.
if it's like off a day trade or like a swing trade based off the daily, I'll go at least 14 to 30 days out because you want
Okay.
to give the trade some time to pan out. Um, I like to look at it in the sense of whatever time frame it's on, it's going to take at least that amount to
Okay.
pan out, right?
Hmm.
Sometimes longer, sometimes shorter, sometimes even the same day, like it'll hit every target if it's really volatile. But yeah, you really want to have time. If it's like a weekly time frame, I usually do like minimum 30 to 45 days, usually
Okay.
45 days, depending on what stock. But and then the watch list, you'll see like the expiration dates that I choose depending on the setup.
So, question with these new, now I feel like with it being Trump's market, it's it's tough to hold on to a trade a little bit longer now because you just really don't know. So, should I somewhat maybe reevaluate what I would traditionally do for my stop loss now, or factor in that okay, this is just Trump talking about it. Maybe it can recover, or maybe it will. Go in the direction I need. Like, how should I be more so cognizant of the new market that we're all trying to adjust to at this point?
Definitely. 100% agree because it has been a little challenging even for myself. Last week, I literally just took 4 trades and that's it, which is I usually do like 8 to 10 a week. But yeah. Um, so because of the volatility and you never know what they might say after hours or even pre-market or what have you,
Yeah.
I usually use like 7% of the account in a swing trade. Right now I'm
Okay.
using 5%. So if it is like really bad against us and it hits like our stop loss, for
Hmm.
me, like if it hits it, I'm just gonna take it off.
Hmm.
It's not the end of the world. But whatever happens, at least I'm not gonna take that big of a hit until, things maybe change a bit where we can hold swings more efficiently as before. Because, I'll be in a swing for a while and it'll be,
Hmm.
going in our favor beautifully with no issues. But now you got Trump, and then if Elon and them want to have a little squander
Yeah.
on the internet, it'll be a little challenging to say the least.
Gotcha.
So,
Okay.
um, yeah, I'll definitely say looking into sizing down a little bit more, maybe
Yeah,
not risking
definitely.
as much as before. That way we can maybe give it a little more room, right?
Okay.
Like for example, on this W4 CVS,
Hmm.
if my stop loss is usually on the bottom right, like over here,
Hmm.
I may want to put it down here because it is a swing trade and I'll be aiming for, higher targets and it might take even longer for it to go in our favor and stuff like that. So, um, you know, in this example here, you may want to give it a little more room just because it is a swing trade and let it, pan out further. At least that's what I would do.
Okay. No, this is really helpful. So just be a little cognizant of the market, but also maybe have to make some adjustments, size down a bit, and you know, just try to understand that this is just what the market is giving at the moment. So, okay.
And it won't be forever, right?
Yeah.
Like the the last I would say, so my worst month futures wise was I think April. Yeah, I think it might have been April or March, one of those two. The second, like ever since the volatility spiked, and then it kind of got like a little more relaxed now.
Hmm.
Um, Whereas let's say, as I mentioned, the W setup, pretty much one of my best ones.
Yeah.
Last December, that thing printed like 13, 17 times. I love that month. Literally my best month all of last year. I need more months like that. But with things changing now, I haven't seen that setup appear as often. Maybe twice a week if I'm lucky, when it used to be 2 or 3 times a week, like consistently.
Yeah.
So it has been pretty spotty in that regard. I've also added like other tickers to look at. Like for example, when I was trading futures or when I trade futures, I would trade YM and um, RTY. But
Hmm.
now I'm trading, so I have YM up, I'll have ES, and then I'll have gold up. Because sometimes if YM isn't really doing much, ES will probably be giving a better setup or doing something. And then if both of them aren't doing anything, then gold might be doing something that I can look to get into.
Hmm.
So I have three different things to choose from to give me a little more opportunity.
Okay. Now this is helpful. Thank you.
Of course. So definitely test that out. Definitely
Yeah,
keep me updated
will
and
do.
let me know how it goes, and we can just brainstorm some more, see what else we can do. But we can
Sure.
start with that for now.
Thanks, I appreciate it.
Absolutely. Let's see. Ravi, if you're here. Oh, Jay, I just saw that you're in here. Is that you mentioned profitability in the questionnaire? Was that you? You can come off mute or type in the chat, whatever you want.
Yes, sir. That was me.
Cool.
Yeah, I think just to double click on that, I think it's a combination of things, man. I think it's, you know, time in my entries and trusting the setup associated, even if I find myself into a little bit of drawdown in the interim, right? And not getting shaken out of trades.
Hmm.
And then the other bookend of that is sometimes writing green trades to red trades, right? Which is kind of like the counterpoint, which is to say, being more um, how can you say? I wouldn't say intentional, but like more aware of when my trade is being invalidated, right? Versus when I should hold through a little bit of drawdown and not get shaken out. You see what I'm
Mhm.
saying? Yeah.
Definitely. Um, Starting from like kind of the end and then from the beginning, uh, when you said getting shaken out of trades, based on your stop loss, like is your stop loss based off like a percentage, a dollar amount, or like based on price action?
And that's the sticking point, man. I think I'm still trying to get over that hump of watching the P&L, right?
Mm-hmm.
Yeah. So watching the P&L, I think, and then, what comes with that is just sizing, right?
Yep.
And so relative to the setup, just, sticking to the confidence in, okay, how should I be sizing this based on the rating of the setup? If it's an A plus setup and I find myself into a little bit of drawdown, well, let's just, set a consistent, call it percentage loss, and just trust that as this A plus setup continues to show itself, it's a game of probabilities, right? So,
Hmm.
maybe you lose 3 out of 10, right? But those seven that play out will be the ones that, make back the three that didn't.
Hmm.
But that's really what it comes down to, man. I think it's just watching that P&L relative to the size and then shaking in my boots around, man, I really don't want to lose this dollar amount.
Hmm.
And then, sometimes inadvertently cutting the ones that end up playing out.
Gotcha. So first and foremost, definitely turn off your P&L on whatever platform you use because P&L is irrelevant because the P&L didn't get you in, it shouldn't be getting you out. Um,
That's a
I
bar,
always
actually. Right.
I always
Facts.
say it like we're here to like trade our plan. We're not here to trade the money, if that makes sense. Because like our plan is what gives us or loses us the money, right? And when we start like kind of getting in our way of like looking at it and getting triggered by that, that's when we get into trouble. Like for me, I know people who have their P&L open and it doesn't affect them. I'm one of the people that it affects. So, when it comes to trading, it's really about knowing yourself and knowing what to do, what not to do based on that. So even for me, like I'll have my P&L off even to this day because I know that it's going to affect me and I want to like, mess with some trades and things like that, especially with like a new setup that I've been using where the targets are a lot further away and I'll be up like 300, $400, but I still can't take anything off because it hasn't hit a target yet, where I'm not
Right.
used to that. So definitely turning off P&Ls number one. When it comes to stop losses, I wouldn't really use the fixed amount because that may not work fully in your favor. I'm not too sure when you joined, but we were going over it in the beginning of the class where generally we really want to um, base the setup off of price action and then from there decide based on the setup what we're willing to lose. So, for example, let's just say the CVS setup. Let's just say this 2-1 on the weekly. Let's just say I want to take this to the upside. If it does go there, and my stop loss is going to be, let's just do $2 to keep math simple. And then let's say my target is maybe somewhere up here around $4. And then, of course, we can have like one target here, then another one there, so on and so forth. Let me bring up the options chain so we can maybe see a clear example. So we're going to be looking at calls. Let's just say I'm doing July calls. Uh, let's say a 65 strike. Delta is 44. Let's just do 45 to make it easy. And I think the premium was like 180 or 190. So CVS, 65 strike. Um, what was it? Let's say entry just to keep it simple. 190. Delta is going to round up again. Just keep that 45. Can't type apparently. So in this case, with the stop loss being $2, more or less we'll lose $45, maybe a little less because delta decreases as it goes away from our strike price. But let's just say it stays at 45 for the sake of the conversation. If it hits my stop loss, I'm going to lose $45. I mean, $90 per contract that I have, which in this case here would be close to like maybe 40 to 50%, give or take, somewhere in that percentage. So if you use a fixed 30% stop loss, let's just say that this is the candle. If the candle pulls back, 30% might be like over here, like halfway to the stop loss. So it might come back, stop you out, and then go to your targets because you were using like a fixed amount that you didn't want to lose percentage wise. That's why I don't really find that as effective because the stop loss percentage might be different, especially if you're trading the strat, because it's always going to be different, right? This inside bar could be $1. This one here just happens to be $2. So we're going to be adjusting our position sizing and our stop loss based on that, right? So if this setup is going to lose me $90 and I don't want to lose more than $300 on the trade, I can only get three contracts because that'll lose me 270 in total, which will be within what I don't want to lose or more or less than what I want to lose, which is 300. Does that make sense?
Yeah, I mean, it does a lot actually. So, right, you talk about having a plan and trading a plan, and that being inclusive of, not just the setup, but also how do we think about sizing our entries relative to what we're willing to lose on the basis of, right? Like, or rather to say differently, anchored to the candles that we are, entering off of, right? Right. So, okay. Now, I think just the follow on that I would have to that, right? So that hypothetical being what it is, I think especially when trading options and especially trading weeklies, you do have that theta element and component, which complicates a bit some of what we just framed up here, right? Like the sort of price by time element. How would you think about, just in the same example, how long you would allow this trade to play out, right? So we are, basically saying, great, let's ratchet down the number of contracts that we're going to trade relative to what we're willing to lose, anchor to that bottom of that inside bar, but that math can start to fluctuate as the trade takes longer to play out, right?
Definitely. So theta, I don't look at it too much because I'm just going to be in and out within 2 hours anyway.
2 hours.
Also,
Okay.
I don't really trade zero DTEs unless it's Friday. And even if I do, I'm reducing my position by half. So let's say if I'm usually using $1,000 a trade, like
Hmm.
throughout the week on Fridays, because it's zero DT and volatility and theta is a lot more rampant, I'm probably going to use $500 on that trade just to be within a similar loss amount per trade and give it more room. Because, a zero DT can go from like up 20% to down 50% in like a minute, depending how volatile the stock is, right?
Right.
So you want to account for that where the percentage is going to be increased because of the other factors. Um, Generally, I would never swing trade a weekly contract. To me, I rather have time on my side. I would only ever use weeklies for day trades, and I would never let a day trade turn into a swing trade unless it's like a runner position and I'm up like two, three, 400%, and I want to see if I can get some more out of it. Other than that, I'm just gonna close it and sleep well without having nightmares about Trump messing up the market. So,
Facts, facts.
um, I would definitely say in that case, like, are you holding trades like all day?
Not necessarily, right? But I think as I've back tested and forward tested this sort of notion of, holding the trade until the trade is invalidated, just witnessing that, sometimes, the trade might not be valid, or excuse me, the trade on a chart basis, rather on a price basis, might still be valid. But if price finds itself into some consolidation, I could still see, start to see my P&L bleed, um, even though the trade is still quote unquote intact.
Gotcha. So the idea would be like, let's say, even if in this example that I have on the screen, even if it didn't hit price action stop loss, it hit the dollar stop loss that I was willing to lose on it.
Right.
Gotcha. Yeah. So in those cases, I would just take the L because even if it is choppy, that tells me that the strength that I'm looking for that day is not really what I want. So it's probably just best to just cut my losses and go about it. Because sure, it can chop and then the afternoon go in your favor. But it's like, I don't like trading for that long. I only trade, well, adjusted recently from like 8:45 or 8:30 sometimes in the morning to like 12 noon. Other than that, I just shut everything off because I don't want to babysit a trade all day. So generally, I'm hitting some targets before 12 noon in most cases. At least, like I mainly trade Tesla options and like some other options if the setup is there, if I'm
Hmm.
even looking at it for like swings. But day trading, I usually do Tesla. And Tesla, you'll know in the first like 15 minutes if it's going to go in your favor or not. So um, I usually don't.
Sticking on that, man, and I don't want to hijack the session,
Mhm.
um, but curious as to whether or not you caught just while we're on the commentary about Tesla, that downside move. I think it was on Thursday, right? So, in the spirit of call it, all right, cool, Tesla, we're gonna watch it play out. Had your levels marked out as well, and it sort of played in a range um, of those levels to the. No, actually, I think Tesla on Thursday it opened below our put trigger for Thursday,
Yep.
and then it retraced right till about noon, and then we got some news that hit, and then all hell broke loose.
Yeah, our short trigger was right under this level right here.
Right.
And in these cases, I just skip that initial setup because I would never, we never want to be desperate enough to chase a trade because there's different setups that are going to appear. For example, if you miss that initial drop, if you go on the 30 minute and assuming you were trading the afternoon, which I wouldn't have done, we get a nice a shooter inside bar trade that we can take to the downside. So you could have gotten that setup if you wanted to. That's why I always like to have, as I was showing here, is like this is kind of what you want to have, right? Like your trading system outlined. You want to have the setups that you're looking for, whatever they may be. So we have like backups, right? So if I miss the 4 hour entry, if it gaps up or down, as we just saw, I have a Momo Hammer shooter setup, which kind of was what I just showed you now on Tesla on the 30 minute. I have
Hmm.
these other setups. So pretty much I have like a lot of backups. So if one doesn't present itself, I have this one. If that one doesn't show up, then I have this one, and so on and so forth. Um, but yeah, I would definitely size down on those 0 days and also know the stock that you're trading. Because if you're trading SPX, for those who trade SPX, you know that 30, 40, 50% in in 10 seconds, that's how quick the movement is. So those you definitely don't want to hold for a long time. You're really just going to be in and out most of the time anyway. Or if you don't want to deal with none of that theta and stuff, just trade futures. Same exact chart, same setups, no theta. But ultimately, this is kind of what you want to have, right? You want to have all your rules, your risk management guidelines. I kind of have it here. So I reduce my size on Fridays, um, 3 to 5% of the account instead of like usual 7, 10% per trade. And you can just size according to what day it is, what you're trading, things like that, and what you're willing to lose.
Got another follow up question for you, man. So, say coming into the day, right? You got Tesla on your watch list, and I see the watch list that you send out on a nightly basis, right? You've got some of the futures up there as well. Are you setting actively alerts for each of those setups, or do you have all of the charts up for the tickers that you're watching, and you're flipping back and forth across time frames to sort of try to pick the pattern out of the haystack as they play out?
Uh, Not anymore. When I first started, I was doing that. I kind of just make it simple for myself now. So I have a chart like this. So I'll have four time frames up. Sometimes I'll just be looking at like YM. If not, I'll usually have maybe like gold up here like this. So I could like look at gold and then also look at the other things at the same time. And then on the other screen, like on Trade of Eight, or if I'm using Top Step, I'll have three or four other charts up there so I can see those time frames. I'm
Gotcha.
not looking at like 10 different tickers at the same time per se. Like maximum now is like two to four. So like, like I mentioned, YM, ES, and then gold for futures. And then for stocks, I'll just choose one, usually just Tesla on Wednesday through Thursday. And then I'll just keep it there. Like on Tesla, I'll set alerts because I'm usually looking at futures mainly.
Yeah.
But even then, for Tesla, I'm usually taking the 4 hour triggers because I don't want to babysit it on the lower time frames. In this case, nothing would have happened on Thursday because I missed it. It like gapped below us. The day before, though, when it completed that H or bearish
Oh
TTO,
yeah.
that one was perfect
Hmm.
because it opened up as an inside bar and then just straight down to our target. So it worked out in our favor.
Last question, unless somebody in the group also has another question. On those Tesla positions that you're taking, right? So I see the alerts by price. Do you also have, prior to coming into the trade, an estimate on the ideal strike price um, that you would take in the instance that that trade plays out, or you know, the setup that you have, prioritized by A plus and on down, like indicating, all right, great. Well, if I get a 4 hour, if I get my A plus 4 hour setup, boom, break to the downside, I'm willing to take this thing $3 to $5 out of the money. Or are you always, irrespective of what the price of the contract is, saying, hey, I'm $1 to $2 out of the money, and depending on price, thinking about my 7 to 10%, right, depending on where I am in the week, that'll just dictate how many contracts that I load up. I know those a lot of questions all together, but hopefully you follow my sort of train of thought there.
Yeah, definitely. Like according to my sizing, is it kind of just no matter what I'm gonna do, like at the money or in the money contracts, or do I kind of like choose something else based on the setup, things like that?
Exactly. Yeah.
It depends on the volatility of Tesla. Like if the IV isn't that high, I can definitely go for closer in the money or at the money contracts. As a general rule of thumb, you can always look at the ATR. You can either use this one that I kind of made off the original aside the ATR without the calls above or puts below because we don't really need that, have our own levels. But I look at the ATR, right? And generally, you don't want to go more than 50. I would even argue maybe 60% based on its ATR, which is about what, 19, $20. Let's just round up to 10. So if I'm gonna, let's say, go long off of, what is this, 302? I'm gonna choose a 312 strike price as like the
Mm,
furthest, so $10 away, because I still want, if price does go in my favor, to have the potential to go in the money. And as we know, the more in the money it is, the more delta is going to be added in our favor and the more money we're going to make dollar wise anyway. So I prefer, at least for Tesla for now, because volatility is crazy, I usually use $10 out the money as like a basis. And if it's a little cheaper on Thursday, Friday, I'll maybe go $5 out the money. It really varies from week to week depending on the volatility, what the market's doing, things like that.
super helpful, man. Appreciate it.
Absolutely. And even like if you guys trade SPY, right? Same concept. ATR is about $8. If I'm gonna get a trigger off let's say to the downside, that's what, 598. I don't want a strike price more than 594. So 594 would probably be where I'm aiming for strike price wise. And based on the ATR, price SPY should be hitting that same day based on its movement. Great questions though. Thank you. Cool. By the way, whatever other questions you guys have, definitely put it in the chat. Eloise, I got your question next, and then Sam, I got yours next, um, based on the questionnaire. Eloise, you mentioned Entries for options. What do you mean exactly by that? Cool. I'm glad the other ones answered yours. Excellent. If anything does come up, let me know. Sam, so you mentioned trusting your strategy and taking your setups when they appear, holding your target instead of exiting early, and re-entering if you get stopped out early, but price reverses. All right, so the second half of the question, pretty much if you re-enter, if you get stopped out early, because price might reverse and go back to your original area. Let's break the first part down first. So trusting your strategy and taking your setups when you appear. Of course, back testing is going to help with that because in back testing is going to like show you that the setup is at least valid from the data that you collected. Of course, the biggest thing, the next step is really going to be forward testing it, which is when it appears, like literally just press the button. That's really the biggest thing. Literally just press the button. Another part of this, just to see kind of where you're at, like what specifically happens that makes you not trust the setup. It's like, did you take a loss earlier that day? Were you having some losing trades in a row? Like, what exactly causes you not to trust your setup? Fearing losing? Well, what about losing? Like, what does losing mean to you? And again, this is a safe space. Say whatever you want, no judgment. I've had grown people cry during my one on one sessions. Will not say who, of course, but that has happened. It's all love. We're here to grow. But yeah, what does losing mean to you? Ah, there we go. Now we're getting to the bottom of it. If that's an answer that you don't have, that's definitely an answer that you do, that you want to have, that you want to know, right? Like, what does losing mean to you? That could be different for other people, right? Like, for example, what I find sometimes with like corporate clients is like in the corporate world, we pretty much um, what's the word I'm trying to look for? We progress by doing, right? In the corporate world, and if you like fail, that means that you don't get a promotion or that you don't get this or that you don't get that. Where in trading, it's a little opposite, right? Trading is the opposite of corporate world. We can't force anything to happen in trading. Yeah, you can study all you want, X, Y, and Z, but you can't force a trade to work. You can really just get in the trade and see what the market wants to do, and then you just wait some more. Um, let's see. So the strategy is wrong and you won't make money from it. Well, based on your back testing, is your setup and strategy valid? Like, has it consistently made money before? Does it make money overall? Like, what exactly?
Yeah, we've all felt like that.
100%. I definitely felt like that. Definitely a learning experience. You've done manual back testing over 3 months and it's profitable for that. Have you done so? Do you think if you back test further than 3 months, if it'll give you maybe more confidence in the strategy? And also, how long have you forward tested the strategy? Like, how many live trades have you taken? Got you. I am a perfectionist in many things in my life as well. So I definitely know where you're coming from because that was a big thing for me as well. It's like you can make everything perfect or as close to perfect as you can in trading. But again, it's really up to the market ultimately. So it's really like about growing and learning to be a good loser, especially when it comes to trading. Because I used to get upset when it comes to trading, until I kind of had like an epiphany. I forgot what video I was watching, or maybe it might have been like a Randy Howell video. Um, but think of it this way: if you take your setup, um, and it works, or it doesn't work, we should have a similar reaction to it, right? It's like, all right, cool, it worked, or cool, it didn't work. Let's wait for the next one. Where it's like it's always something deeper than just winning or losing, whatever that may be. I definitely would recommend, for you to spend some time and write it down. Like, besides losing the trade or losing money, like what does it fully mean for you? Let's say, as an example, for me, before I left New York, trading was one of my, as in my head at the time, like my escape route, right? Like once I get all this money, then I can leave and my mom will be taken care of, X, Y, and Z. I don't need to be here and keep on taking care of her myself, so on and so forth. So when I would lose, it would bring up like all these emotions and thoughts because it's like it's not just losing. There's always something attached to it that makes us react the way we do when we lose a trade. So for me, I will like get into like revenge trading, over trading to make money or make more money, so on and so forth, which will just end badly for me ultimately.
It made it worse.
It'll always make it worse because I'm no longer focusing on the system anymore. I'm focusing on the money. So to me, a loss wasn't just a loss. It meant all of those things. So once you fully understand like why the loss means so much to you, then we could bring awareness and mindfulness into our trading. So when these things happen, we can bring ourselves down from it to not get trapped by the emotional thought or the thought itself that'll cause us to self-sabotage in whatever way that may be for you. So um, definitely being mindful of these things is going to help a lot. And also collecting more data for your brain, right? If maybe you back test 2 or 3 more months, you have a bigger sample size to see more examples on how it worked out, how it didn't work, so on and so forth. And then based on that, as you forward test it, um, it'll give you even more confidence. As I always say, always journal all of your trades and label them with a specific setup. That way, when you go back to it, you can be like, all right, this setup is actually valid because I've taken this live, let's say 50 times, and I've been winning 75% of the time. And overall, I'm green on this setup. So you can see the proof that's happening. Because when you're trading on the spot and you lose, all those thoughts and emotions might come up on the spot that kind of keep you stuck. So having those like reminders definitely helps a lot. Definitely, if you don't have it, make a little folder to like kind of continue imprinting that in your mind. And as always, push the button. That's literally your only job as a trader. Once you get in, you can't do anything else. You can't make it go faster. You can't make it go slower. You can't do what those man, what's that meme? My cousin sent me something the other day. Um, is there a search thing? You can't get your little hammer emoji and make the price go down. Oh, it's not as cool as they showed it. It was like, there we go. They're like hammering the thing down. You can't do that. You just get in and wait and let it do its thing. Win or lose, it's not up to you. The only thing that you can do is just press the button and follow the setup entirely. If you do get emotional like I do sometimes, literally just go on your chart, set an alert on your stop loss and take profit and go do something else until the alert goes off. Because if you're used to like being in like a power position somewhere like in your regular life and you're not used to that, trading is definitely going to wake you up to it because trading, you have no control once you get into a trade. And even then, it's really up to the market anyway. You can have all the analysis in the world. Your setup could be 99.9% profitable, but that 0.1% you can still lose. That's why we always respect the plan, always respect the stop loss, all of that stuff, and never get married to a trade because it's not the last trade you're going to take. It's not the first one you're ever going to take. There's going to be many more, and you don't want to lose your whole account over one trade.
Don't get married to a trade. Oh, that's good.
We're only here to date them real quick, an hour, 2 hours, a week, 2 weeks. If it's a swing trade, then we
Get
go
it and
about our
quit it.
business.
Get it and quit it.
Yep, exactly. So always remember that, right? We're just here to trade the setup. We're not here to stick with it. Because I've seen, like even myself, I've been up 100, 200%, let that go to negative 50, 90%, negative 100%. The whole thing is done. Because I was so fixated on what I wanted it to do. But remember, the market doesn't care about what you want, doesn't care about what I want. It's going to do whatever it is. We're just here to take whatever money we can from it when the opportunity is there. Cool. Hopefully that helped in your first half of the question. Second half of the question about re-entering. Um, I don't really re-enter trades. For me, like if I get stopped out, to me the setup is invalid because it shouldn't be stopping me out. Once I get in, it should just either hit the target or stop me out, and that's it. So for my setups, I don't re-enter. Like once I get stopped out, it is what it is. Even if it does go into my target, it sucks. Yeah, I'll be a little annoyed, but it's not the end of the world. Again, there'll be more. I just gotta show up every day. And when it does show up, we press the button as I mentioned and go about our business. Like even let me bring up gold real quick. Let's see. There was this W on gold that I took on Friday. We have pretty much the higher low and then the reversal. First target is the center, and then the second area was kind of just discretionary because some people would consider like the W being completed like over here. Some people might think it's like that one or this one or even this one up here. So I just have like an area for the second target. Anyway, we can see in this example, we only hit the first target and then we die down. So I only got my first target in, and then I moved my stop loss to break even or slightly above break even, and then it faded and stopped me out in profit for the remaining contracts. Now, if I was stubborn and I'm like, no, I'm going to hold on to this until it hits target two, I would have been very upset with this drawdown. And even then, it looks like I think we're still heading down. So again, you never marry a trade. The setup is a setup. This specific version didn't work out fully, unfortunately. It is what it is. There was one, I think last Friday that did pan out fully. Yeah, here we go. Well, almost fully, not where I wanted it to, but close enough. So we have another one here. We get the higher low reversal to the upside. It's the first target. I was aiming for this body high as my second target. Didn't quite hit it, but it did get further than the other one that I just showed you. So again, we always take what the market gives us, not what we want, and we go from there. And with your re-entries, I would like paper trade it, see if it is even worth it to re-enter. Maybe for that setup, it might be. I just don't have any setup for I'm going to re-enter on it. To me, it's just yes or no, and that's it. Then I just move on. Cool. What other questions do you guys have or want to go over?
I got another follow-up, man. If nobody else has anything on this W pattern, is
Mhm.
there one or two additional confluences that you overlay on the pattern just to um, sort of improve your sort of confidence interval or rate on the trade playing out?
Yeah. So there's like different versions of it, of course, right? So I'm just gonna draw just in the line graph as an example. So the candle that gets us into the trade, it can just be a regular two down, two up, like this one. It could be one that's more of a hammer. There could be a three up version. I personally prefer the three up or the hammer versions because it's letting me know that buyers are present, right? And it's pretty straightforward for the setup, right? There's only three steps, or I guess technically four steps when we get in. Step one is just from market open, we make a low, which we have right here. Step two, we come back up as if we're going to make a bearish TTO or H. The H fails once it comes back down. So this is step one, step two on the move up, and then step three is the move back down. And then step four is just like the higher low, and then the reversal that we get in. So this is pretty much what I look for like the ones that I'm going to take with no questions asked. It's always going to be market open, move down, come back up, fail to make the H, and move that up. Um, that's pretty much how I just look at it. I look for it on the 5 and 15 minute. You can also find it on the daily if you were here for the CVS trade that I showed earlier. But that's basically how I look at the setup. I just kind of keep it simple. The 5 minute one usually prints between market open and like 11:30, 12 noon. The one on the 15 minute would usually print between like 12:30 and like 1:30 p.m. Eastern time. So if nothing happened in the morning, sometimes I'll get on like at 1 p.m. after lunch and just see if it's setting up. If not, I'll just shut everything back down and go about my day. But uh, those are some things that are like the parameters that I look for in the trade and when they start printing.
Got it. Thanks.
Yep. I like to keep some of my setups pretty straightforward. This is one of them. You don't really think too much about it. Just low, retracement, come back down, fail to complete the H, and then reverse up, and then see how far it can take you.
There's a quick follow-up question.
Yep.
I might have missed that. I'm trying to get the kids sorted for bed. With the W, I know it's typically something that you look for off the open.
Mhm.
If we kind of are flat or choppy at the open and then things kind of pick up after 11 or 12 or 1 or something, and then we get that big downtrend, would you start looking at it then, or is it strictly kind of like a no? And I also know you don't really trade the afternoon, so that may play into it, but like, would you look for it outside of just kind of that opening first couple of hours?
You can like it can print later on. Like even this example here on the 15 minute, this one printed like at 1 p.m. But it's what I consider like a dirty W because it like sweeps that liquidity over here. When I prefer to get the higher low for more confluence. Um, let's see if we can find one in the afternoon. I haven't really seen them in a while. But yeah, sometimes you'll even get ones like this that I think I showed you the other day or like right before market open, it'll print as well. So like it'll set up pre-market and then right at market open, you pretty much get in the first candle. So that'll happen sometimes, like right before market open, it'll trigger you in. Sometimes it'll happen in the evening. I just haven't seen it in a while. Let's see if we could find. I wouldn't really technically this could be one. I just wouldn't really take it. Like it's off like a move up from the day. And then it looks like it might have sweeped it, but kind of like a little W there. Just not one that I would take because when I'm not trading in the afternoon. Let's see what else we got.
I mean, that's fine. I'm happy. I think I'm leaning more and more towards like being very, very selective with
Hmm.
setup. So like if this is, something that kind of presents itself better in the mornings and it happens once or twice a week that you get a good setup, like that's cool. Less is more is what I'm really, really, really starting to kind of zone in on.
100%. We have this one right here in the afternoon session, right? Pretty much just straight down all day. We had that H that completed, and then the like the this leg right here is the leg of the W. We make that little center, and it prints a three up. This is on the 15 minute, and then it hits the first target there, and then it completes the W over here when it breaks these highs, pretty much right at the end. So if you happen to have been on the market in the afternoon session, you could have caught this one.
In which case, you probably just skip the first target and just go straight to second target because first one's not really worth it. Right.
Um, Not necessarily. Like even if it's not worth it, I'll probably still move my stop loss to um like break even at the very least if it does hit the first target. In this case, again, price action is always different. This first target is 65 points. If I had, let's say, three micros, I'm at least gonna take one off at the first target, and then I'm gonna take the rest off when it hits the other ones because it's pretty much 200 points at the second target. Or if you're using the wick, about 240, which is about $120 a contract. So pretty much 240 there, plus the like $30 on this one, the first one, that would have been what? 270 bucks on that trade
Hmm.
in an hour, give or take. I'll be happy with that. Even if the trade only gave me $25 an hour, I'll be happy with that.
Yeah,
Like,
fair.
not many people get $25 an hour, and we can do it by pressing buttons, being comfy. So trading does make desensitize you to many things, though. It's like $10 shipping. I don't know about that one. Risking 300 on a trade? Let's do it.
X.
Yep. Cool. But yeah, hopefully that answered the question. Cool. All right. Little overtime, which is always fine. Thank you guys for coming out. Before we wrap up, as always, in good fashion, what was everybody's biggest takeaway from today's session? What did you learn? Put it in the chat, come off mute. All good, either way.
Hit it and quit it.
100%. Take your money and go home. Yep, definitely stop watching P&L. For anybody who does look at P&L, turn it off. Most, if not all, platforms would allow you to turn it off.
That's good too.
Like even now on YM, this might be a W. Who knows? If this H doesn't complete. I don't like all these wicks, but I won't see it. I'll see it in the morning because I don't like trading in the afternoon. I just want to enjoy my relaxing time. Cool. Yeah, Terrence, definitely the biggest thing. This year definitely taught me a lot, like pivoting and not like just sticking to one thing. Because the way the way this market is going now, in my opinion and my experience so far, it's like you never know when a tweet might come out and ruin your whole day. So we really have to like always be adjusting and keeping a lookout on things. And as I always say, if you guys, especially for those who are new, either that are here or that are watching this, if you can learn how to trade in this market and survive it, when the market gets easier, it'll be a breeze. So the biggest thing, keep showing up.
Yeah.
Cool. I'll see you guys next weekend. Is going to be a class similar to this. It's like the Let's Learn with Advent series that I do with other groups that I support, but that's on YouTube, not on Zoom. So it might be on Saturday, I think at 7 or 8 p.m., probably 7 p.m. though. You'll just see it on the YouTube channel. It'll just say, like, Let's Learn with Advent this specific day and the time. Anyway, if you guys do want to come and let me know of your progress from what we talked about today, definitely let me know or just, DM me on Discord, what have you, and we'll talk about it. The recording for this session is going to be up on the YouTube tomorrow at like 12 noon. I'm going to release it. So if you do want to see the recording, it'll be there. And I will see you guys on the internet. Enjoy your night. Thanks for coming out. Oh, one last thing. What were you gonna say, Lisa?
Have a good night.
You as well. One last thing. The same link that you used to join this session is the same link that you use to join all the future sessions. So like keep it somewhere. Um, I don't know, in your notes or whatever. I'll also post it as always to remind you guys. Um, but yeah, same link that you used to join this one, you could join all the other ones. Anywho, I'll see you guys. Have a good night.
Night.